Yeah, hi everyone. My name's Kamil Dimmich. I'm a partner at North of South Capital. We are emerging market specialists. We run public equities, so all our investments, we run about $1.5 billion, are invested in global emerging markets, in listed markets, which I think is a little different from some of the other panelists. But hopefully that'll provide for a very interesting discussion with many different viewpoints.
Thank you.
Right. Hello, everybody. Anthony Bontrager, WestRiver Group. We're a multi-asset manager based in the Seattle area of the United States. We own, operate, and invest in venture capital funds across different sectors and different geographies. Roughly a little over $1.5 billion of AUM under management today.
Thank you. Badar, please.
Good afternoon. My name is Badar Shanfari. I'm the Deputy CEO of Jabreen Capital. Jabreen Capital is the private equity arm of Invest Group, which is the largest investment company listed in Oman. Our focus is investing in the region, in GCC and Oman. Sector-wise, we like healthcare, education. And then geographically, we are active in Southeast Asia, where we have presence in Singapore and Vietnam, and next year we're expanding to Indonesia as well.
Thank you.
Hi everyone, my name is Khaled Talhouni. I'm managing partner at Nuwa Capital. We are a multi-stage VC firm based out of Dubai and Riyadh. We focus on investing in early stage companies in the GCC, Egypt, and Turkey. Have been in the early stage investing space for the better part of 16 years. Yeah, excited to be here. Thank you.
Thank you. So basically, Badar, I'm going to start with you first. I came to Dubai back in 2020. Some of my portfolio is in real estate. And at the time, I was told that, okay, this is not the right market right now because you could buy something at a 30 or a 40 cent on the dollar. There was excessive supply. But then what happened afterwards was we had a COVID, which was a big plus for the region. We had Ukraine and Russia war. Again, we saw a lot of capital over here. Now, given the Gulf War, which is taking, this Palestinian war between Israel and Palestine is taking place, as an investor, I am looking at the region and I'm looking at the time frame before this particular event happened, and there was so much positivity about the train starting from India all the way, which at the previous panel they've discussed. How would you navigate this particular era right now? Like, would you still consider the UAE, the whole Middle East, especially Saudi Arabia, still a stable part to invest? So,
yeah, I would say that, from our perspective on the private equity and VC side, UAE and the kingdom specifically, are where most everybody's going to look for stability in this region right now. I think Mohammed spoke about it earlier today, is the risk of contagion, right? And in order to basically mitigate that risk of this spreading into a wider conflict, we're all going to be looking to the leadership of the kingdom and the UAE to kind of help us navigate that. At the same time, we've talked with our bankers here in the region as well, and for them it's been business as usual, right? And I think that to the extent that the region continued to project that it's business as usual and give comfort to outside investors, that should still remain the case. I know we, from our firm, from WestRiver's perspective, we're very bullish on the region. We're looking to establish presences here already, and we see no change in that strategy at this point.
But what's your perspective on that, please?
Yeah, I mean, I agree. And really the region, if you're looking at it, in my opinion, from maybe far away, not having a presence on the ground, it might all look scary to you. And I was, thanks due to have an event, it was a few weeks ago in Doha with one of the large multinational banks, and they're surprised it was cancelled, and it seems they've cancelled all travel from all the Middle East for their staff. That means all the way from Oman to Morocco. You can imagine the distance. So in my point of view, the region, especially the GCC and maybe UAE and Dubai in particular, has proven, unfortunately, there's always crisis somewhere. It didn't start with the recent crisis or the Ukraine-Russia war, which they've benefited from. Before that, it was Arab Spring. and so forth. So the region has proven to be, in my opinion, a stable place to do business in a volatile environment. And that naturally will scare away maybe some people. But I believe the ones that really look into the details of the business case to be in the region will, and who have done so, have benefited a lot. So we feel that while you cannot predict what will happen around you, we believe with the leadership and the track record of the region should welcome business and investments.
I mean, just to add to that, I think obviously we're all kind of hoping for a quick and speedy, peaceful resolution to the conflict. And I think like the different parts of the world always go through periods of outright conflict. I mean, the Russia-Ukraine conflict is one example, and I think what's happening in Israel and Gaza is no different. And there's always a risk of contagion with these conflicts. The point is to kind of mitigate that risk as much as possible. Assuming it does not evolve into that, then I think it's very similar to kind of other parts of the world where you do have these localized conflicts. I think it's worth bearing in mind that the underlying secular trends that are driving economic growth in the GCC and the wider region are really driven by, you know, really robust kind of indicators, demographic growth, economic liberalization in the GCC, state-driven expenditure, oil prices. All of these kind of come together towards painting, I think, a relatively robust economic picture. And at least in our segment in venture capital, you see that there's a, you know, on top of that, a huge adoption of technologies for the first time that's really kind of driving these economies forward, especially in the tech sector.
So this is actually good that you've touched on those particular points, and this is where I wanted to touch base with you. In the UK, obviously there's a lot of element of a self-inflicting injuries such as Brexit and so on and so forth. And that has led to where inflation is in comparison to the rest of the Europe. Inflation is still very high in the UK. But as of today, the economic minister of the UAE, he gave us those fabulous stats about inflation, about the interest rate, about unemployment rate. Everyone where I come from, they wanted to move their businesses over here. But again, that sentiment could slightly change. But from your perspective as an emerging market expert, where do you see that moving in terms of that gap? Do you see that gap widening up further from here?
Yeah, so, you know, actually, just to touch on what everyone here said, it's quite interesting because as global emerging markets investors, we've had to face crises like this before. And when you work with listed equities, you see everything reflected in real time. Unlike, obviously, if you're investing in a venture capital or private equity where you've got the firms, you can see share prices move and react, and that creates opportunities. And the Russia invasion of Ukraine was a great example where Eastern European equities all sold off in sympathy, much like the kind of knee-jerk reaction now of investors has been to sell off UAE equities and Saudi equities because of what's going on in Israel. And I think these are times when you have to really keep a cool head and think about the long-term fundamentals, put things in perspective. And of course, the risk of contagion is real. There are geopolitical risks out there. Earlier speakers were talking about China, about Taiwan. But at the same time, equity markets tend to overreact to geopolitical risk. They sometimes miss things, and many investors missed that the Russia invasion was going to happen, even though we were being told it was about to happen by a lot of intelligence sources. So you know, they do make mistakes, but most of the time they overreact. And this is where an active equity investor can add a lot of value. So the region is really interesting right now, especially if one considers that UAE and Saudi are hopefully extremely unlikely to suffer from all this. So I mean, that's kind of the first point. And the bigger point is what you touched on, and thanks for that, is that emerging markets as a whole are seen as incredibly risky. There is a history of our markets having crazy fiscal policies, monetary policies. We all know Argentina goes bankrupt every 8 years. Funnily enough, people still wanted to lend them money for 100 years a few years back, which was pretty interesting. But But we have this perception of global emerging markets as an incredibly risky investment. And the truth is, when we look at the vast majority of the markets that are now dominating the emerging markets indices, they tend to have much lower levels of debt, lower levels of inflation, and actually lower interest rates than many developed markets. And so there is an argument that from a macro perspective, a lot of these markets have been de-risked. Many of them still have geopolitical risk. We've been reminded of this in the past few weeks, of course, and in previous years, and Taiwan and China are always out there as a risk. But also, we have to remember that these markets are able to live with these risks. I always think of South Korea, when North Korea used to fire off a missile, markets would immediately sell off, and everyone in Korea was laughing because it was just an opportunity to buy things at a discount. So one has to always step back and be quite cool about it. But the long-term trends, I would say, are for emerging markets to be quite attractive from a risk-reward perspective, because valuations still don't reflect this lower relative risk that we see relative to developed markets.
I'm going to come back to you about on the foreign currencies in terms of a currency, like which would be the best one. But I'm Anthony, to you. In terms of the developed markets and emerging markets where you specialize in, especially in the VC space, the ecosystem is completely different. But when it comes to Dubai, the ecosystem is much, much developed, much better.
Yeah.
I mean, I know the Sheikh Makhdoom, he said it like this is the new Europe, if the Middle East, the new Europe. Could you please help us to understand how that ecosystem is much better in the Middle East and also in the Asia as well?
Sure. Well, I think it comes down to really three things, and the first is governmental infrastructure and policies. I think the UAE and in general the GCC region have done a really good job establishing proper capital markets authorities that help quality GPs or investors come into market and have confidence that the risk of bad actors taking advantage of whether it's a startup company or say more of a retail-like investor, those are relatively mitigated within reason. So that infrastructure is critically important, because if you're going to patriate capital into this region to help it grow, which it needs, I mean, it's a two-way street, that has to be there. I think the second piece is that the success that the region has seen in some of the large companies that have actually started to emerge here, a lot of the delivery companies and the consumer focused companies on the fintech side, for examples, right? You are now at the very kind of beginning stages of starting to create a virtuous flywheel effect here in the marketplace, right? Where those companies will grow, those companies will exit either through M&A or IPO, and that capital ideally would then get redeployed back into the region via new startups, whether those founders or those executives who got their windfall can redeploy it back into the region. That's probably the second most critical piece here, that the capital doesn't fly out the door once the exit occurs, that it stays here and continues to invest back in the region. I mean, we saw it in the US, in the Seattle market, right, where I'm from. We're the home of Amazon and Microsoft, right? And yet we still don't have a really fully developed venture capital ecosystem in terms of number of VCs over 100 million of AUM, right, on a given fund. And it wasn't until we started to see more unicorns and more multi-$100 million companies get founded there and exit, and the money stayed, that flywheel effect took place. I mean, it took us about 15, 20 years to catch up to the Silicon Valleys or the New Yorks of the world. And so those are the two pieces I think that I would focus on here. And I think what the GCC has been especially good at. And I expect to see more of that. And that's one of the many reasons why we're looking to set up shop here.
Yeah, I mean, just to add to that, like specifically in the VC space, you see that the beginnings of this happening. So, for example, like the biggest exit happened in the region so far is Kareem, and we track out of that about 300 to 400 companies being formed by founders who used to be at Kareem. So usually like a management within Kareem who kind of spun out to build their own. And the reason why that kind of virtuous cycle happens is because once these people have tasted validation of building a business to scale, they kind of exit and create their own. You're seeing the same with Jahiz in Saudi, which is a food delivery business. And you see how people are also spinning out of that after they had a successful IPO and build their own kind of businesses. So there's this very positive flywheel effect that's happening now and accelerating very, very quickly. I think we estimate that over the coming 5 to 7 years, an $8.5 billion gap in financing for growth stage opportunities. And that just means that valuations are going to be very interested. They're going to be very positive relative to the rest of the world here. I think, not for me to disagree, but I think we're possibly in a better position to most of kind of Central Europe or continental Europe with respect to the venture ecosystem in the long run over the next 10, 20 years. Because there's, like I said, like demographics are very positive, extremely young population, relatively less regulation compared to Europe, for example, less taxation, really a base to kind of like to build great companies out of. And we're starting to begin to see that now happening faster and faster and faster.
Is less regulation more effective? Just very briefly.
Sorry?
Less regulation more effective?
Yeah, absolutely. I think like I don't have that much exposure to kind of European businesses, but I kind of touch base with my VC colleagues over there, and it's quite stifling. I think like overall between taxation, regulation. I mean, you just look at the EU-wide rules on anything from AI to privacy, etc. This is a very difficult environment to build in, and it shows. I mean, there's very little outside of the UK and fintech. There aren't that many tech companies that emerge out of Europe that are commensurate with the size of the EU as an economic bloc. Yeah. And you see a lot of European founders, if they want to build for the world, they move to the US, right? There's some good exceptions to that. And the point here is not to compare MENA to Europe, but I just as in terms of if I could bet as an index on an emerging asset class, and it would be tech emerging from Europe or tech emerging from this block, let's call it the wider MENA and Turkey block, I would bet here. But I guess I have to say that because I do actually bet here. But I think objectively that would be the right place to invest.
Factoring the geopolitical risk for sure. But I have a slightly bit more difficult question, and you can take your time to answer this one particular. Given your space that you are in, given the anchoring in like the tensions are just continuously increasing between US and China. We don't know what the relationships would be perhaps with Saudi Arabia, but that's not where we will go. But the place where you sit in terms of your investments that you make, how considerate are you that, okay, you know what, I'm gonna go invest more here where I am based, or I'm gonna increase my exposure in Asia, and within Asia, you have China, Malaysia, and all of that, but they are slightly different pocket, or in India, which has been very much neutral among everything else and getting much more investments.
Yeah, I think we were told after lunch there'll be easy questions. But it seems that from our perspective, we feel naturally China is we're long-term investors, right? So if you look at news, they're not performing as well, and numbers are sometimes people maybe don't trust the numbers as much as other markets. However, the macros of Asia in general is really, we feel, is positive. That said, in terms of investments from our end, for example, in China, we feel it needs being on the ground. I think is a key requirement for any investments, and that's why our presence, and we've seen it during COVID, our presence on the ground in Singapore, in Vietnam, allowed us to do transactions and raise money. We have office as well in Korea. In terms of India as a place to invest, I feel it's becoming more and more attractive, especially with the geopolitical situation with China, where a lot of the global, let's say, companies who are exporting globally are moving businesses there. Vietnam benefited a lot from that as well. And we feel other South East Asia and Asia in general countries would benefit from that shift. And it is happening for one reason or another, geopolitical, but also from the different demographics and the rise of middle class in China. In terms of investing locally or abroad, we would like to do both. Oil prices are great. Everyone is bullish. Tomorrow, oil price goes down to $15. It's a different story, right? However, other economies, Asian economies, India, would benefit a lot from reduced energy prices, and therefore, our strategy is having that natural hedge, where we do have exposure in the region, and we do have exposure in emerging markets that, if one benefits from reduced energy, the other doesn't, and vice versa. And again, we will continue that, and emerging markets, I feel, are continuously
Great.
attractive. I don't know if I answer your question, but
No, that because if the oil price is dropping in one, it's definitely beneficial for countries like in India, where we could see expansion in terms of economic growth, GDP, and all of that. So you certainly answered that very well. For the same question, but just from a slightly different lens, in terms of a growth and value, where do you see it?
Yeah, look, just to actually also touch, I think all these points are really well made. And I think the main thing to highlight here is, if you're talking about emerging markets as an entity, you have to remember there's a huge variation within emerging markets. That includes, of course, the UAE and Saudi. It also includes Eastern Europe, Brazil, China, Taiwan. And these are very different markets. And the ability to invest globally in such diverse markets is a real asset to any active manager. So, you know, one of the great joys of my life is that we don't have to be fully exposed to China or to the oil price. We're able to manage that exposure by diversification. And I think exactly, you probably want to balance that out. You want to have countries that will benefit from one thing and others that will benefit less from it. And so, you know, this is really, there's no other asset class like emerging markets where you have such diversity. Countries like Taiwan, which actually, talking of this flywheel effect, Taiwan is a fantastic example of a market where technology companies have been incredibly successful. Taiwan's got a huge number of listed small mid-cap technology companies that have been founded by talented engineers with the benefit of abundant capital. And this is something where the Middle East, I think, can replicate that potentially by attracting talented people. The capital is already here, and try and grow an ecosystem like that. The Taiwanese market has performed as well as the S&P over the last 20 years. Not many people know that, because people think emerging markets always underperform. So you have this ability. Sorry, and to come onto your question, which is, I think, a very important one. When you're dealing with public markets, we are value investors. We believe that as a public markets investor, you have to be incredibly focused. And it's true, I think, also private investment. You have to be incredibly focused on not overpaying for assets. We get carried away by great growth stories. India is a fantastic growth story in the demographics. We understand why people want to invest there. But if you overpay, you're going to end up losing money in the long term. We did a little study. Alibaba, which everyone, of course, knows is the most successful Chinese internet company. When it listed in 2014, people were buying into the growth story, and it has grown revenues practically 20-fold since 2014. And you would have lost money buying it in 2014 because people were overpaying for that growth. The growth was fantastic. It more than delivered on people's expectations, but you would have lost money by overpaying. And so, I think growth is a brilliant thing, and it's why people invest in emerging markets. You want to build growth into your portfolio, but it needs to come at a reasonable price, ideally at a discounted price. And so as value investors, you're going to outperform because you're getting these bargains.
It's a great point. On the private side as well, right? I mean, I think the definition of growth is changing, right? In times of great stress, right? It forces markets to take a step back and rethink kind of basically get back to first operating principles, first investing principles, right? And we're seeing that today. I know in the US, we're seeing it where this growth at all cost mindset, kind of what you're alluding to on the public side, right? Where, hey, just show me growth. Forget about the amount of cash that I'm torching over on the other side here. Just look at my growth. And the problem is that we've found out, the flip side. of that strategy. Now growth is being looked at kind of in the rule of 40, right? You know, how is your growth versus your EBITDA margins contributing to the overall health of the business? And I think that at any stage, startup, growth, late stage, that is starting to take effect here. And I think that's what's really going to propel us for the next probably 2 or 3, vintages or cycles, if you will. And I think now is right the time from an alternative investment strategy. I'd be interested to hear your position on this. Is now is the time to be investing in alternatives, because it really is a good time. And if you look at history, it's times like these that the Airbnbs, the Careems, the Microsofts, the Facebooks of the world were built. Right, so it's pretty exciting.
For sure. I've already got a signal from our MC because short of time, but I wanted to ask you one more question before we open the floor to the audience, and then they will have an opportunity to ask 2 or 3 questions. The last question from my side, and anyone can take it. In the midst of everything that where we are living, and this is an actual question as an investor that I look at, which currency represents a safe haven in the emerging markets apart from the dollar? What is safe haven? Starting with you, Khaled. In the midst of everything, what is safe haven and what currency is a safe haven?
Safe haven currencies. So we invest. I'll give you from our experience, like how we invest. So we look at MENA and Turkey. So that's GCC, Egypt, North Africa, and Turkey. Obviously, Turkish lira and Egyptian pound are kind of like complicated currencies, as you know. So, but we try to invest in those markets that play into the strengths of that macroeconomic situation. Meaning, so in Turkey specifically, there's a real depth of engineering talent that can build world-class products that scale globally. So what a core part of our thesis is to invest heavily in Turkey, but in companies that have primarily revenue outside of Turkey. So primarily like Euro and US based or dollar based revenue. It could be GCC because like it's all pegged to the dollar.
Yeah.
Or US and European based revenue. And that's kind of like how we invest as a thesis, to grab the opportunity there while also kind of being, like hedging that currency risk. And that could play to a strength because on a like-for-like basis, the talent ends up being slightly cheaper because of that currency situation as well. So if you're building big engineering teams, you're able to arbitrage that cost to some degree. Same in Egypt to some degree.
We got about a minute and a half left. Just anyone can give me, if there is further escalation of tensions, because Israel doesn't see this one stopping anytime soon, what asset, I wanted to hear the name of the asset, could be over here, could be a safe haven. It could be what would you consider as a safe haven? Is it gold, or is it like just what could be a safe haven? How can you diversify?
Well, I'd say it sort of depends on what you mean, how far things escalate, because there is a point where there is no such thing as a safe haven in the financial world. But I'm not a huge fan of gold personally as a safe haven. I do have a little bit personally, but it's not really an asset. I like assets that generate income. We actually have a fund that invests in dividend-paying stocks from all over emerging markets, and that's behaved like a real safe haven over the last year and a half. So if you're able to show steady income streams that are repeatable, that grow in line with inflation, you'll deliver good results. We launched it a year and a half ago. It's up 7% in total returns. Markets are down 10%. It's because you just keep pocketing that positive carry. And so if you've got positive carry, you're probably reasonably safe.
Fantastic. Now, should we open the floor to the audience and have first question, if anyone?
No questions. Wow. You have absolutely covered it. Signed, sealed, delivered.
Well, our time is pretty much up as well at the same time.
Thank you very much, gentlemen.
Thank you so much.
Can we get a round of applause, please, for our panel?